All right, everybody, Assalamu alaikum. We would like to go ahead and get started on our webinar today. Welcome to this webinar on calculating Zakah on modern financial assets. There's a lot to learn about Zakah, which is the obligatory charity owed by Muslims. And this presentation will provide a brief overview of who should pay Zakah, what types of property it is owed on, and how to calculate it on certain assets. I'll take a moment to introduce your presenters for today. We're joined today by Azad's president and CEO, Bashar Qasim. Bashar holds the CSAA designation for Certified Sharia Advisor and Auditor, and he's one of the very few in the US who hold that distinction. And my name is Fatima Iqbal. I'm a Certified Financial Planner at Azad. I'll be giving the main presentation today, and Bashar will jump in as appropriate, as well as answer questions from the audience at the end. Before we begin, we want to let you know a little bit about Azad Asset Management so that you know where we're coming from when we talk about Zakah. On your screen, you'll see 7 of the services Azad provides for our clients. These include calculating purification and Zakah amounts, which is the topic of today's webinar. Azad follows halal investing guidelines from AOFI, the Accounting and Auditing Organization for Islamic Financial Institutions. The Zakah calculation guidelines in this presentation follow the AOFI rules. AOFI's comprehensive standards are based on a consensus by internationally renowned Islamic finance scholars from 8 schools of thought, but please note that this presentation is not intended to be comprehensive in all Islamic schools of thought. We take Sharia governance and compliance very seriously at Azad, and in keeping with the guidelines from AOFI, we have an active Sharia advisory board and an in-house Sharia advisor and auditor. Additionally, our Zakah and purification calculations are audited for accuracy by a third-party verification firm, Islamic Finance Advisory and Assurance Services. This webinar is intended to provide a brief overview explaining the general principles of Zakah calculation. And you can always learn more by contacting us at 888-86-AZZAD. Now let's turn to today's topic, Zakah. First, let's understand the basics of Zakah. Zakah is a financial obligation on every Muslim who owns certain kinds of assets worth more than a set amount, the nisab, if they have owned those assets for at least 12 lunar months, known as the hawl. Zakah is mentioned in the Quran 81 times, and it's often mentioned along with salah or prayer. While giving to charity is a financial transaction, it's an integral part of a Muslim's spiritual health, and specific care should be given in making sure it's handled correctly. Zakah is an opportunity to bless your wealth by giving it to help those in need. Zakah is obligatory on every living Muslim, regardless of gender, age, or mental status, who owns assets that meet the other conditions of Zakah. However, if certain conditions are not met, then it does not remain compulsory. Let's take a look at the conditions that must be met before Zakah becomes obligatory. I'll just list them now and then explain them in the next few slides. The conditions are owning at least the minimum amount of wealth, the nisab, the lapse of 1 lunar year, complete ownership of the assets by a particular person. There should be no other reason an asset is not zakatable, such as insolvency, and the assets must have some real or assumed growth. First, the total amount of wealth owned by an individual must meet a minimum threshold called the nisab. And while prophetic hadith describe the threshold or nisab for different assets, such as gold, silver, and livestock, the question is what nisab is relevant on our modern financial assets. The nisab can be determined based on the nisab of silver or gold. And this is equal to the current market value of 85 grams of gold or 595 grams of silver. According to the Hanafi and Maliki juristic schools, the nisab is calculated at the beginning and end of the year, and changes in between are overlooked. Any increase of property after reaching the nisab during the year is to be included in the total sum counted for zakah. This is considered the easiest and most applicable among the other juristic views, which has made the majority of scholars accept it. The value of 85 grams of gold in early April this year was around $4,800. Therefore, any Muslim who owns zakatable assets worth $4,800 or more, or who has held these assets for 12 lunar months, should pay zakah on those assets. Just to clarify, this should mean that any Muslim who owns zakatable assets, again worth the $4,800 or the nisab, also has to meet the 12 lunar month held period. We'll go over which assets are zakatable in a moment. So what happens when wealth reaches the minimum amount or the nisab? The next condition is that these assets should be held for a full lunar year, starting from the day it reaches the nisab. The Arabic word hawl refers to this holding period of one lunar year after which zakah becomes due. Zakah is not due on a particular day for everyone, but it should be paid once per lunar year. Many Muslims choose to pay their zakah during Ramadan, both for the additional blessings of giving during this month, and because it's easy to remember from year to year. Each individual can set their own hawl date based on when they have held zakatable assets for a minimum of one lunar year. For people who choose to set a hawl date based on the solar calendar, the percentage for zakah is raised up to 2.577% instead of 2.5%, because the solar calendar is a little bit longer than the lunar calendar. There are 5 factors that define complete ownership: settling, ownership vesting, accessibility by the owner, disposable by the owner, and no interference by others. Before we discuss how to calculate zakah on stocks, let's briefly recap the kinds of accounts that can hold stocks and their ownership criteria. For these accounts, we should refer to the conditions of zakah to see whether the owner has complete ownership. Owners have full ownership in accounts like IRAs and education savings accounts, but may have to pay taxes or penalties when withdrawing. For accounts with full ownership, zakah is owed on the amount owned after taxes and penalties. However, for accounts that do not have full ownership, like current 401k accounts, where a participant is not enabled to withdraw money, there is no zakah due since ownership is not complete. The third condition that must be met is that the assets must be completely owned by a particular person or family. Assets owned by an organization or government are not zakatable. Zakah is liable on the assets that are completely owned and vested for the owners. Complete ownership requires that assets be accessible and disposable by the owners without the interference of others. If you completely own an asset, but you would have to pay taxes or penalties if you sold it, this does not nullify the fact that you own it. So for example, an individual who has an IRA can access the money in the account, even though they would have to pay a penalty and taxes if they sold it before reaching retirement age. This fact does not prevent the IRA from being zakatable, but zakah would only be calculated on the amount that would be left after applicable taxes and penalties. On the other hand, an employee's 401k or 403b plan may not allow them to withdraw while they are still at their current job, or if they're below the distribution age. In this case, this 401k or 403b is not zakatable until the employee either leaves that job or reaches the age when they're allowed to withdraw from the account. Each employer's plan may be unique, so if you're unsure whether you're enabled to withdraw money from your 401k account, read about your plan's provisions in your 401k's summary plan description from your employer. A person must also be solvent in order for zakah to be due from them. If a person has debt that is immediately due, that is greater than what they own, then they are also not liable for zakah. In calculating zakah, we start with the zakah base, which equals all zakatable assets minus liabilities or debts, that are payable by the hawl date. Zakah is not obligatory on wages, salaries, and income at the time of receiving such income. Zakah is assessed based on conditions we discussed earlier and must meet the ownership and hawl period requirements. Assets that are zakatable include gold and silver, cash equivalents, assets intended for trade or sale, good current debt, livestock, crops, and minerals. All cash, gold, and silver are liable for zakah at 2.5% based on their values on the day of the hawl. And remember again, if the hawl is linked to the solar year, the zakah is 2.577% instead of 2.5% to make up for the difference between the two calendars. There are certain assets on which zakah is not owed. Personal use property is not zakatable. This includes one's personal residence, vehicles, clothes, and other personal belongings. Assets that are considered to be capital goods, such as tools or factories, are not zakatable themselves. However, the income that is derived from them is zakatable upon meeting the conditions discussed earlier. Assets intended for retained ownership and for the purpose of deriving income are not zakatable. This means that zakah is not owed on the current market value of investment property intended for income. Instead, income derived from them is zakatable, as is the case with capital goods. So for example, zakah is not paid on the market value of a rental property, but income that is derived as rent and is held for the hawl period becomes zakatable. Only halal and lawful assets are liable for zakah. So no zakah is required on haram or unlawful assets, such as money derived from interest, gambling, alcohol, or stolen money, bribe money, or any other impure money. Such assets or money must be returned to their lawful owners or donated to charity as purification. Purification is not a form of zakah or sadaqah and is only intended to rid oneself from impure money that one never intended to benefit from. In modern financial times, this includes securities or stocks that are deemed not to be halal according to Sharia investment guidelines, including financial options and derivatives. Azad Asset Management uses halal investment guidelines established by AYOFI and adopted by the Azad Sharia Advisory Board. Let's look at how debt relates to zakah in cases where debt is owed to you or where you owe debt to others. This relates to modern financial assets since bonds are also a form of debt. It's important to know that interest-based debt securities, including bonds, banking notes, CDs, commercial paper, money markets, and others that are liquid are liable for zakah only on the principal amount or market value, whichever is lower. Any gain due to interest accrued or market appreciation is not recognized as lawful and is not eligible for zakah. Such gain should be considered unlawful and purified by donating to charity. Let's take a look at instances where debt is owed to you. If you make a loan to someone else, you owe zakah on any amount repaid as of the hawl date if it's in good standing. If the loan is past due and it's in bad standing, then no zakah is owed until the owner recovers the debt and the zakah is paid once for all past years it was in bad standing. If you have taken a loan and owe debt, the amount due before the hawl date is deductible from one's zakah base. However, debt payments that are due after the hawl date are not deductible from the zakah base. So for example, a person may deduct their current home mortgage payment from their zakah base, but not the entire loan amount. The interest portion of any debt acquired in a non-halal way should not be deducted from the zakah base. However, one may deduct debt that is a result of acquiring commercial assets from one's zakah base. Zakah is obligatory on assets that have been held and saved for one full lunar year after reaching the nisab, the minimum amount of wealth after which zakah is due. This, of course, excludes any interest income that may have been unlawfully earned during the year. Most of us acquire money at different times throughout the year, such as from salary, inheritance, gifts, rental income, etc. If you choose to be very specific and only pay zakah at the time it becomes obligatory, then you can track the earnings and pay zakah for each amount separately when 1 year has passed from the date on which you took possession. But an easier method is to pay zakah on all the cash you've held for 1 year since reaching the nisab. This will bring a greater reward and raise you higher in status. It is easier and more generous towards the poor and needy and others who are entitled to zakah. For example, if 1 year ago you had $10,000 in your account, the value dipped mid-year to $5,000, and now you have $15,000 in your account. With this method, you would pay zakah on the $15,000. So we've gone through who is liable for zakah and what assets and account types are zakatable. Let's now talk about the calculation of zakah on stocks. We'll use common stocks as an example since we get a lot of questions about them. And of course, our clients at Azad know that we calculate zakah for them on an annual basis and send a statement showing the total amount to be purified and paid from their portfolios. This calculation can be used for shares of publicly traded companies that you may acquire. And for the purpose of this explanation, we'll assume that the stocks held follow halal Islamic guidelines, since zakah is not owed on shares of stocks that are not halal. There are two basic intentions for purchasing the stock, either for the growth and appreciation of the stock, or for the income and dividends it can provide. With this distinction, let's take a look at how we can calculate zakah on a portfolio of stocks. While a shareholder may reap the benefits of both growth and income from a particular holding, the original intention of why it was purchased is the key. Unlike taxes, we don't have the IRS looking over our shoulder. However, since zakah is a matter between yourself and God, your intention regarding your investment determines which calculation to use. The zakah of a portfolio of stocks will be calculated by adding the zakah owed on the income stocks and the zakah owed on growth stocks. So you may be wondering, why differentiate between growth and income stocks? Stocks held for the purpose of growth and appreciation are like assets that are held for the purpose of trading and are considered commercial goods, or in Arabic, arud tijara, where arud means non-cash and tijara are items intended for profitable trading. For these shares, their zakah base will be based on the total closing market value of the shares owned, or also known as the net asset value, on the hawl date, and the net asset value is then multiplied by 2.5%. To give you an idea of how a zakah calculation on growth stocks is done, let's take an example of an IRA account investing in a growth stock that has a market value of $50,000 on the hawl date. To calculate the zakah, we must account for 10% penalties if the person is under age 59.5, and also the tax bracket. So assuming this person is under age 59.5 and in a 15% tax bracket, we calculate zakah by multiplying $50,000 times 1 minus the penalty rate times 1 minus the tax rate by 2.5%. This gives us the zakah due on the amount they would have in hand if they were to withdraw from their IRA account. Stocks held for the purpose of deriving an income, such as dividends, are different from arud tijara, since the primary intention now of purchasing these shares is not for trade and appreciation. The zakah is not paid on the market value of the shares owned, but on the zakatable assets in the balance sheet allocated to shares owned. A balance sheet is the financial statement that lists a company's assets and liabilities. For income stocks, the shareholder can consider him or herself as part of the company and owning a share of the company itself, including all its assets and liabilities. The zakah must be calculated on the company's zakah base for zakatable assets, and the person must calculate the respective share of zakah that falls upon his or her shoulders from the company's due zakah. So again, in order to do this, we must look through to the underlying company's balance sheet. The portion of company assets which are used for income generation, such as capital goods, property, or equipment, are not going to be zakatable. However, other assets on the balance sheet, such as cash or inventory, are zakatable. So for example, a company may have 80% in assets that are not zakatable and 20% that are zakatable. Any current debt and long-term financing of zakatable assets is then subtracted from the zakatable assets, and this is then divided by the number of outstanding shares. We are then left with the zakat base, or zakatable assets per share. Now we understand that the calculation on income stocks is not as simple as growth stocks, and is one of the things that we calculate for our clients at Azad. Now, as a reminder for all of us, these are the categories of people or the causes that are eligible to receive zakah. We often get questions about the difference between the masakin and the fuqara, where the masakin are the needy and the fuqara are the poor. And it's that the poor have nothing, but the needy are those who have something, but not enough to live decently. So the masakin or the needy really do have more than the poor, but they still lack adequacy. And Allah subhanahu wa ta'ala referred to the masakin in the Quran in Surah Kahf, chapter 18, verse 79, in the story of Khidr and the Prophet Musa alayhi salam. And here the masakin were the poor people who owned a ship, but actually worked in the sea. And speaking of eligible recipients, we know that this year many American Muslim organizations and individuals have been struggling financially in the face of the pandemic. Some mosques, which may have relied on in-person donations to meet a majority of their monthly revenue needs, have feared that they could be forced to end operations as giving has dried up due to social distancing and, of course, lockdown orders. Azad is encouraging its clients to consider donating to mosques and other nonprofit organizations hit hard by the pandemic crisis. And as financial advisors, we also become intimately aware of financial concerns and stresses on our community. A few pressing causes our clients have highlighted include financially supporting imams and Islamic center staff so they can have a decent living, helping poor Muslim youth that are battling mental illness and spiritual decay, educating and introducing the message of Islam in the US, helping the homeless and the refugees, and even things like restoring artificial human limbs to poor victims of war. Let's talk briefly about purification, which is different from zakah when we're talking about investing. Part of the process of making stock investing halal is screening companies' lines of business, as well as their financial ratios. These are some of the screens and ratios according to AOFI. Sometimes it's not possible to know exactly where all of a company's revenue comes from, or the revenue is a trivial amount. Because of this, Muslim investors should purify their investments by donating to charity the small amount that may have come from impermissible sources. Purification is different from zakah and should be calculated and deducted before calculating zakah. Abdullah bin Umar was a companion of the Prophet Muhammad and the son of Umar bin al-Khattab. In reference to purification, Abdullah bin Umar said, "To return 1 dirham haram is more beloved to me than paying sadaqah of 100,000 dirhams." And then he continued by adding another 100,000 dirhams and another 100,000 dirhams until he reached 600,000 dirhams. So here we can see the importance of paying purification. Before giving money to a charity, you want to make sure the organization is legitimate and your donation will actually reach those in need. So you can consider using the following tools. The IRAs Nonprofit Charities Database has a tool called the Exempt Organization Select Check tool. And this tool allows you to enter the name of an organization and see if the organization is exempt or not. It's important to verify that an organization that claims to have 501c3 tax exemption is actually exempt. If the organization is not exempt, then your donation will not be tax deductible. Also, Charity Navigator rates charities based on their financial health, accountability, and transparency to help donors make informed decisions about their contributions. Charity Navigator has evaluated over 8,000 tax-exempt charities. And again, if your chosen organization is not included, you should be sure to find out why. And finally, GuideStar maintains information on 501c3 nonprofits. Financial documents such as the 990 help you evaluate the legitimacy of an organization. The 990 discloses where and how an organization's donations are spent, including the earnings of top officers. All nonprofits are required to have up-to-date 990s available to the public. And again, if an organization does not have this information readily available or is not forthcoming if you request it for them, you may want to reconsider your donation. Azad is also pleased to help our clients with tax-efficient ways to donate to charity. So please be sure to talk with your Azad advisor to learn more about these options. This next section takes us into our pop quiz on Zakah calculation. So in this first question, Zaki is a 45-year-old engineer who has a 401k plan with his employer. The market value of the plan on his Zakah haul date is $100,000. His 401k contains stocks for capital appreciation only, and Zaki's tax rate is 30%. He's not in debt and is fully vested in the 401k plan. So how much does Abdullah owe for Zakah on his 401k? Now, if you remember in our presentation, we talked about ownership as being one of the criteria for Zakah. And since this is a 401k plan, and Zaki does not have full access to his 401k, in this case, the answer would be D. The 401k is not zakatable because he cannot withdraw the assets. However, if his plan did allow Zaki to withdraw assets, maybe after a certain age, or allowed some sort of in-service distribution, then the 401k may become zakatable. In the next question, Khadija is a real estate flipper who buys and sells houses. She bought a house in Miami for $450,000. While she is seeking a good sale price for the house, she received a year's rent on the house totaling $30,000. The market price of the house is $500,000, and Khadija is not in debt, and she kept all the rent money for a year. How much zakah is she liable for after 1 year? So in this case, we have a rental property, and the answer is A, 2.5% of $530,000. And again, we discussed the intent plays a role also in whether an asset is zakatable. If an asset is intended for income, then the zakah is paid not on the property value, but on the value of the income that is held during the haul period. But when the asset is meant for trade and appreciation, then the zakah is paid on the market value of the asset. Question 3. Ahmed was given a car as a bonus from his employer. Ahmed decided to sell the car when he received it. It took him 14 months to sell the car. How much zakah does Ahmed owe on the car? And here, actually, the answer is C. No zakah is owed because this is not a commercial asset acquired with the intention to trade. As we talked about, arud tijara, which again is an asset which has the intention for trade and appreciation. And question 4, Yusuf was given options to buy 10,000 shares of Cisco at $10 per share. A month before the haul, the price of Cisco reached $30. Yusuf then exercised his options and purchased 10,000 shares of Cisco. How much zakah does he owe on these shares? And again, think back to the requirements for zakah, where one of the requirements is that the asset has to be held for the held period or the 1 year period. So in this case, the answer is D, 0, because he did not own the shares more than 1 year. And our last question. Hassan just found out that his financial advisor had invested his account in bonds, which earn money only from interest. He bought the bonds for $10,000. They're now worth $11,000. The bonds have coupon payments of 5% per year and mature after 10 years. The total amount he has earned so far is $2,000. How much zakah does he owe on them? And this question touches on the topic that we discussed about assets being halal in order to be zakatable. So in this case, the answer is A, 2.5% of $10,000, because zakah is only due on the principal since the interest gain is not halal. So we'd now like to open up our presentation to our Q&A portion. I'd like to invite you to please send us questions through the question and answer chat box, and I will be asking these questions to Bashar as they come through. So Bashar, the first question that we have is, can I pay Zakah monthly based on 0.21% on the value at the end of each month? So I believe 2.5% divided by 12. Can I divide that by 12 and pay it at the end of each month based on the value?
That's a very good question. You know, it is okay to prepay the zakah before its time. It was reported from the time of the Prophet, peace be upon him, that he used to take the zakah from his uncle Al-Abbas for a year and 2 years and 3 years. However, you can pay it in advance, but at the end of the haul, you have to calculate and adjust. So you could have been overpaid or underpaid. You have to adjust. But because 0.21%, the zakah as a form of worship has to be exactly practiced the way it is. So it is 2.5% after the haul, and the haul is the lunar haul. So in this case, it has to be 2.5% from the haul time. And you can do adjustment, like some people, for example, they like to pay based on the solar year, and you know, instead of 2.5, then you adjust it 2.577, so you go by 7% more. But that's really the question. So we have to really stick to how the zakah is being paid. No problem. In the calculation, it has to be exactly 2.5%. How you pay it? Yes, you can do it on monthly, but at the end of the haul, you need to calculate and readjust.
Next question, how does one treat a pre-IPO investment from a zakah perspective?
Well, you know, if these securities are restricted, and again, it depends on on the intention, how you are buying or owning these shares. For example, in this case, excuse me for a moment. Sorry, back. So in this case, if you are owning it for the purpose of benefiting from the trade of it later on, then you have to treat it as urud tijara. But if just you owning it while you really to benefit from the income, then you have to go and calculate the zakah based on the underlying, the zakatable assets within the underlying assets. Now, if these assets are restricted where you really cannot really dispose, then in this case, the ownership is incomplete. You know, if there is any restriction, and some of those assets, like a pre-IPO, they are restricted, or you know, sometimes they may have available liquidity, like even it's limited. They're what they call Rule 144A. There is a restriction for a certain period of time. So there are different type of restrictions. I think the answer to this question depends on the type of the security that you own. But the general idea that if you can dispose and access these assets without interference from other, without somebody restricting you, then the ownership is complete and this money is zakatable. Now, some people, they consider that money, if it's not zakatable for some reason and for a restriction, when this restriction is removed and you enable to liquidate that money, then you pay the zakah 1 year, only one time, for regardless of how many years you owned it. So that's really similar to what we call the malud dumar, the assets or the debt that is being restricted for some reason, or you cannot collect, no matter how many years that stayed unavailable to you, then the scholars just they recommend that you pay zakah once, regardless of how many years that money stayed restricted. Okay, so that's the the question for the pre-IPO, if they fall within that restriction. Sheikh Qaradawi says 10% on stocks portfolio increase plus dividend, not on the capital. Yes, this is that's one of the opinion of Sheikh Qaradawi, but remember that the Sheikh Qaradawi, may Allah protect him, he made that opinion almost 40 years, and it was in a PhD dissertation. Now, with these fiqh institutions, including the OIC of Jeddah or the IOFI and the Kuwait Zakah houses, there is now consensus, better understanding of the nature of this money. Yeah, you're going to find many opinions that they adopted by certain scholars, but these are not what I call the jumhur, the consensus among the scholars. And I recommend that you follow the institutional, the Sharia institutions, because they have a lot of resources, especially the Kuwait Zakah House is one of the most resourceful Zakah house in the world. And actually its opinion and the research that they provide, it's highly respected and adopted by many scholars. So yeah, there you can find opinions like this, but I advise that you follow scholarly institutions more than just one isolated opinions. Do we pay zakah on gold that wife owns? The gold and silver, it depends. The Hanafi school does not distinguish between whether the gold is as a security deposit or as a money or as a jewelry. The other schools, they make the distinction. So the other schools like the Hanbali, the Shafi'i, the Maliki, they just make the non-jewelry gold, the one like, that, or the one that you use as a treasure or as a security is zakatable. But the jewelry in general, if they are reasonable, of course, and again, this is what we call the intention when you own these jewelries, because, as you know, it's a tradition that many in our culture, women, they like to own gold, and sometimes they go beyond just the ornament. So you have to be really honest with yourself. If that gold beyond your the quantities that is known to be for ornament or for jewelry, then that money becomes zakatable. Because, as you know, some people, they use, my wife, for example, she likes to own gold, and I always remind her that any amount above the limit, this should be assessed and pay the zakah on the value 2.5%. The other question from Amir Shodari: do you pay zakah on cryptocurrencies? Well, although the name of the cryptocurrency is the cryptocurrency, it is people treat it as currency, but so far this is one of the new types or models of money. So again, if you are in trading the cryptocurrency and they fall within urud tijara, then that becomes zakatable as urud tijara. But if you use the cryptocurrency where, as a utility, as a way to pay for goods and services as a tool, then that would be considered as capital goods and would not be liable for zakah as money. Because, I think the scholars currently, they look at it as this is not real money like the money of US dollars and yen or dirham, etc. Although some people, they treat it that way, but there is maybe some reservation from many scholars using it as money. But anyway, we could, we could say that this is really a transaction methodology or a payment methodology that people they use. But if your intention to use it to trade it itself, then that becomes zakatable as urud tijara, which is 2.5% of the market value of these currencies. A question from AT Nova: is 529 zakatable? Is rollover IRA zakatable? That's a very good question. 529, again, we want to apply the criteria to first decide whether this is really a money that satisfies the complete ownership. And the complete ownership is your capability to dispose that money or access that money without the interference of others. The fact that you're just enabled to take that money, that would satisfy the criteria of complete ownership. So in this case, the 529 is zakatable because you can really take that money. Of course, it's going to cost you some penalty and taxes. You will reduce the zakatable base from any taxes or penalty due, and then you pay the zakah on the net based, of course, on how the money is being invested. Although many of 529s, they don't give halal mutual funds, so you have to be careful how you assess the zakah on those. Now, the other part of the question is IRA rollover. Exactly, IRA rollover, as everyone aware that these are money that you can access anytime, they're under your control. So that money is zakatable, but again, you reduce the zakatable base by any taxes or penalty due upon accessing the account or redeeming from the account. The other question that I have is I turned 59 and a half and have 401k from my employer, that I am no longer employed with. How do I calculate the zakah? So you turn 59 and a half and you have 401k. Now, if you are not employed any longer with your employer, then the employer, by law, they have to enable you decide to roll over that money and either do an IRA rollover and take control over that money. You can move it to another IRA rollover account, or you can actually withdraw that money and pay taxes. So that money becomes actually zakatable. Again, the way you assess the zakah, you reduce your zakatable base by any penalty or taxes due that you really need to assess. And the way you assess that, you look, for example, at your taxable income. You add the money, the total value of the account, as if you are withdrawing that money. And then you determine the amount of taxes would be due on that money. And again, if there is any penalty, in this case, you are 59 and a half, there is no penalty. So that would be just reduced by the taxes amount. And then you assess the zakah on the net. We have a question from Asif Khan. How can we treat a housing cooperative like a REIT where you just collect the quarterly dividend? Example, Amin Housing, do we apply, let me see here. Do we apply zakah to the entire investment amount or just the dividends received? So with the Amin, so people like, if, just to give you an idea, I think the Amir is referring to probably the investment account or the joint ownership account established by the investor for Amin Housing, where it acts like a REIT, and then they receive money. So you got to be careful here, because this money or your share is not really cash. It really represents, ownership in houses. So that ownership, with this arrangement, some of it considered to be like, as the agreement between the Amin housing and the purchaser or the participant who really buy the house through them. Their role becomes like lessee, and Amin housing becomes lessor. So this is like a form of rental income. You don't, the house itself would not be liable for zakah, because it's not intended to trade it. Actually, they're intending to derive an income because the house is being leased. So in this case, you pay only the zakah on whatever amount left after the hawl. So let's say you receive a dividend, let's say like, $5,000, but the amount for whatever reason lasted until the hawl is a 3,000. So the zakah is actually on a 3,000. Zakah is always a balance sheet item. It's not a profit and loss item. You cannot find, if you want to assess the zakah, you always has to look at the balance sheet. We do not really, we disregard the income statement. And again, this is how it's really zakah adopted by several scholarly fiqh institutions around the world. We have a question. If you have a personal brokerage account, and that question by Amir Shodari, if you have a personal brokerage account and have joint ownership with your spouse and hold the stocks for less than 1 year, do you subtract taxes on short-term rates on the appreciation? And if it's held for more than a year, then you subtract taxes on long-term capital gains. So again, the brokerage account depends on the type of securities that you have or the type of stocks you have in the account. Now, if there is a capital gain and these stocks are deemed to be urud tijara, remember, we have like 3 buckets. One, as we consider it as urud tijara, the one that you buy with the intention to benefit from the profit of trading the stocks. The second category, which is we consider it as urud mustaghallat, which is the stocks that you buy with the intention to derive an income. And then the third category is the sukuk, the one that, which is really a combination of tangible assets and debt or cash alike. So if you're referring to the stocks that are deemed to be like urud tijara, and there is a short capital gain or long capital gain, unrealized, of course. Now we're referring to the unrealized one. Now that unrealized one becomes like a debt, and you reduce the taxes of those short capital gains or long capital gains, again unrealized, from the market value of the security. Now, if we are referring to realized capital gain, short and long, that realized capital gain, and again, Ramadan comes, from Ramadan to Ramadan, the calendar year ends. So many people, they file their taxes. The realized one, starting from the new year, moving forward to the Ramadan, to the hawl, that's the portion as a realized you will be able to reduce from your zakatable base. But the one before, from Ramadan to the end of the calendar year, because that's already reported for you as a taxes that you have really to pay. So that would not be affecting your zakah. I hope I answered this question. This question is a little bit technically detailed oriented. But if Amir you need to discuss that further, if you have any further question to explain you the methodology, we will be more than happy to go in details. But that's very good question, how the debt or the taxes can affect your zakah calculation methodology. We have a question from Karim Agour. Do you pay zakah on HSA, health saving account? Again, same criteria you apply to the health saving account, that if the health saving account, if the money is disposable, even where you can access that money and take it out with penalty, the fact that they allow you to take it out, that becomes zakatable. So you pay the zakat on that one. Again, reduce it by any taxes or penalty due at the time of the haul if you were to take that account out. There is a question from Zular Rahim. Income fund example, if you have $10,000 invested with a company, say that company has 50% assets and 50% business generated income. Do you then pay 2.5% on your 5K portion? Again, we need to know what exactly that 50% assets. Because again, if they could be as zakatable assets or non-zakatable assets. And again, as we know, the zakatable assets, cash equivalent, like, current debt, receivables, inventory, those are zakatable assets. Then you're right. If that's what you meant by zakatable, by assets, zakatable assets, then you pay the zakah on the 2.5% of the value of such assets. Now, if there is 50% business generated income, again, we need to know what type of business is this, but the income that is generated, whatever lasted from that income full lunar year, you pay zakah on that one. But if that income is spent before the haul time, there is no zakah on that income. A question from Brother Kamil Dawouk. Can you pay zakah to the local masjid for its operating expenses? Well, again, that a question. In general, masajid, they're not eligible for zakah. As a masjid, it's not one of those zakah distribution channels in general. But there is a growing opinions and belief among scholars that masajid in non-Muslim countries, they fall within the broader category of fi sabilillah. Since these masajids, they are a way for providing da'wah and providing guidance, and it's kind of like they provide unique services of defending our faith. Then the scholars, and there is again now, I would say majority of the scholars consider masajid in non-Muslim countries, and especially here in America, Canada, Europe, they consider them to be eligible for zakah under the broader meaning of fi sabilillah. And in this case, the operating expenses would fall within that category as an eligible for zakah. A question from Handekar Ashik. If someone is contributing to his 401k voluntarily, shouldn't she has to pay zakah on the 401k balance? Again, depends on the the criteria of complete ownership. If the person above 60, for example, most of the 401k, they allow you to withdraw money once you are above 60, then that becomes zakatable. But if it's not, then this money may not be zakatable. I don't know, Fatima, you have a
Yeah, I think maybe what the question is also asking is about the fact that you're voluntarily contributing to the 401k. So again, I think it's helpful to go back to the criteria for zakah when you want to think about, you know, what criteria makes an account or an asset zakatable. And here we're again talking about the ownership. The voluntary contribution is not a part of that criteria. The criteria is actually the ownership of the asset. So again, like Bashar said, if the 401k is inaccessible, although you are making voluntary contributions, but you cannot withdraw that money any longer until you retire or you leave the company or you reach a certain age. Until that point, that you do not have complete ownership of that asset anymore.
Right.
So in that way, it's not zakatable.
Fatima, you want to take that question?
Sure. So we have another question about do you pay zakah on land properties like agricultural properties? And again, this is based going back to the intention. So the criteria of why the property was purchased, whether it was purchased for trade and appreciation, or was it purchased for retained ownership or income? And again, if it was purchased for trade and appreciation, let's say I bought a land, I say, you know, this area is going to appreciate over time. I'm going to sell it once the value goes up. In this case, I purchased it with the intention of trade and appreciation, and I should pay zakah on it on a regular basis, on an annual basis. But if I've purchased this land, to build my house on, I intend to retain it, or I lease this land maybe to a farmer. In the case of leasing it, where it's now becoming income generating property, then again, I would be having to pay the zakah on the income once I've held it for 1 lunar year.
Yeah.
Another question about stock options. Bashar, would you like to take this one? Do I pay zakah on stock options that are given by my company?
Exactly.
So if it's unexercised.
Correct. So stock option, owning the option to for a stock is not like owning the stock itself. So the ownership here is incomplete, and that stock option would not be liable for zakah. It becomes liable for zakah once you own it. And again, we look at the like here in this case, if the stock was awarded to you from the company, depends again on the stock. We need to because you did not purchase it, so it would not fall as a urud tijara. So this would be zakatable based on the zakatable assets in the balance sheet of the company allocated to every share. So you have to look at the balance sheet and see what are zakatable assets attributed to the number of shares that you own later on once you exercise the stock option and you fully own the shares of the company.
Yeah, and we have another question which is very similar about restricted stock units, and I believe the answer applies here as well. So it's based on the ownership criteria.
Exactly. So like now you're really here getting dividends. Now the money that you get, again, we whatever lasted, and again, like the income, I wouldn't consider really again zakah liable on income. I mean the income, once you own it and lasted for you for lunar years, it's not income anymore. It's really assets, correct? But if you have a shares that they are restricted for some reason and you cannot really dispose these assets and you do not buy them with the intention to trade, that there won't be no zakah on those type of assets.
What about if you have an asset with maybe a mixed intention, where you intend, there's a question,
Right.
if you intend to derive income for the asset, maybe for 5 years, 10 years, during a certain time period, after which you intend to sell it, how would you handle the zakah?
Well, I mean, again, if you have an intention, like, if the intention to trade, then we go by it, correct? I mean, if so you either have an intention to trade or not. So you're right, you may have both, like for example, the public quiz that we have about the Khadija, who is the houses flipper. She flips houses and she got income too. So she ended up paying zakah on the full amount, correct? Whatever amount stayed with her. But once you establish the criteria that the asset, whether it is urud tijara or whether it is a cash or like money, cash and cash equivalent, once you established one illah, one reason for zakah, you stop there. There is no double taxation in zakah. There is no double zakah you pay because of this reason and that reason. Once we identify one reason, one illah for this money to be zakatable, then you will pay the zakah based on that. So if you have both, they gotta be then, in other words, whether you intended to do urud tijara or not. You say, yes, I do. I want to do urud tijara and I want also to derive an income. So in this case, we have to go by the urud tijara. They have to be treated as urud tijara. So again, the zakah, like is a form of worship, and like any other form of worship, the niyyah is so important in it. So it's like siyam. This is between you and Allah Azza wa Jal so based on your niyyah, and you are the one who really can decide on this question.
We are nearing the 1 hour mark. We have one last question that was asked. I want to ask about, was, if you own, let's say, mutual fund, let's say at Fidelity or some brokerage firm, how do you determine the halal status of these shares? And again, that's applicable to zakah, because again, we've been talking about how zakah is only due on halal assets. So what advice would you give to somebody who has maybe IRA, so has mutual funds, which again, they're not sure about the halal status?
Yeah. Right.
So in this case, Bashar, like, would you, in terms of, can somebody purify? It's a very quite difficult question, but we get it a lot.
You're right. Let's just tell you from our experience. Sometimes we get clients that they own certain shares. If these shares are deemed to be not halal, there is no zakah on it. So the question that when you have a mutual fund, it becomes really very difficult. You need to look at the holdings, and then you have to examine those shares and exclude the shares that deem to be non-halal, like shares of banks and companies of alcohol and gambling and all those stuff. Those are not really liable for zakah. You should really avoid them. You should get your investment out of it. And by the way, when you ignore the restrictions and you invest in non-halal assets, it becomes really very problematic, because now you're replacing money that you earned halal with assets that not halal. And sometimes even to get rid of it, it becomes really problematic, because you have to end up selling it, which is also a problematic. So you should really try to avoid and invest in Sharia compliant stocks. And there are really many stocks there. Like even if you take the S&P 500, out of the 500 companies, you will be able to identify 280 of them that they are following the Islamic guidelines that you can invest in them. So first, try to avoid investing on those mutual funds. And try now mutual funds, halal mutual funds are available even in 401k. Alhamdulillah, now even we have what we call the halal fixed income or capital preservation funds. If you want to invest in fund that is really conservative or capital preservation. Now, calculating the zakah is really, it's a big task, very, very challenging. The fact that you need to screen out, and then after you screen out, again, you need to see whether the managers own those shares with the intention to trade them or own them with the intention to derive an income. So you need to look at the investment objective of the fund. So that's another layer of complexity that you may find with those. If you have to really invest, instead of investing in non-halal fund, you may want to maybe buy a basket of companies that you can screen out, and then you achieve your diversification, although that's not my recommendation. If you want something really safe and professionally run, I think halal mutual funds, and there are many of them there, they can be a better solution for you. And at least when you get a halal fund, calculating the zakah becomes much easier.
Bashar, I know you talked about this, but I think this is our last question about assets on, for example, on an income stock. When you're looking at the balance sheet, what are some of the assets that would be considered zakatable? We mentioned cash, inventory.
Cash, exactly. Cash, inventory, gold, silver, receivables, current assets in general, current assets. Usually within that category, it falls within the inventory. Not all current assets, but I think most of them, away from the long-term assets. And then you reduce it by current liabilities, like account payables that within 12 months, for example, those are usually debt due. You reduce it there. And again, it's very difficult sometimes to pinpoint exactly those assets. So we go to something the scholars called khars, which is a estimation or takhmeen. They use the khars. The concept of khars is very popular in zakah. So scholars or the zakah calculators, the people who calculate zakah, usually revert to the khars to estimate what are the zakatable assets, the value or the amount of the zakatable assets. But in general, as I mentioned, inventory for sale, gold, silver, cash equivalent, those are usually the zakatable assets that you really need to use to calculate the zakah on income stocks.
Thank you very much to everybody who joined us today for this discussion on zakah. We appreciate your time and attention. Inshallah, if there's any other questions that you felt were not answered, please feel free to reach out to us by email or call us. We'll be happy to try to answer your questions directly. Thank you very much. Assalamu alaikum.
Thank you, everyone. Assalamu alaikum.